Well, hello, everyone, and welcome to another very special event here on StockCharts TV, our year-end review Reflections 2020. We're taking a look back at the year, evaluating process, evaluating trades and executions, looking, of course, at some of the most important technical events of the year. A fun one to do here on StockCharts TV, where we get a chance to kind of dig into everything at the end of the year with some of the top technicians out there, some of the top analysts in the market. Today, I am so thrilled to be joined by someone near and dear to my own heart, Mr. Gatis Roze, my Tensile Trading co-author, and as you might know by the last name, my father. It's going to be fun to dig into sort of a reevaluating your process kind of concept here with Gatis. We're going to take a look back at his year in the markets, talk to him about what he's been doing, how he's approached 2020, obviously a chaotic one, a volatile one. But we're going to dig into what he's done well, what he wants to do better in 2021. So it's going to be a lot of fun. Now, of course, if you've been on StockCharts for a long time, you probably know Gatis. He's been writing for the site for quite a long time through the Traders Journal blog, if you've read any of his work there. Also through ChartCon, you might have heard him speak at all the different ChartCons we've done, going back all the way to the original event that we did in 2011. So lots of history there from Gatis, but then of course wrote Tensile Trading, the 10 Essential Stages of Stock Market Mastery in 2016 alongside myself, and has just been a fixture of StockCharts for a long time. An interesting figure on the site because he doesn't come from any sort of professional background. He doesn't have any background in the institutional side or as an asset manager or anything like that. He really is someone that's been doing this for over 30 years, managing his own money, investing personally as a true individual investor full time. So always brings an interesting perspective. It's always fun to hear what people think when we get Gatis on the channel. So I'm really excited to dig into this year, especially 2020 with Gatis. I'm going to bring him on. Gatis, Pops, how's it going? Good to have you.
Well, I'm thrilled you acknowledged me as Dad. That's a great occurrence. It's been a traumatic year for a lot of people, and for myself, after 25 years in my downtown office in Seattle, I decided to close that up and migrate to my home here on Mercer Island. So that's been quite a big change, and I'm sure I'm not alone in reflecting that.
Yeah. No, I mean, it's been interesting to see what you've done this year, obviously changing so much about your physical life. But that's the benefit, I think, of us being modern investors, online investors, following charts and everything. I mean, we can do it from anywhere. So it's been interesting for me to watch you pick up and move your office home and run your full investing approach from home. So anyways, I mean, I do want to just first and foremost thank you for joining us, for taking the time. It's like I said, it's always fun when we get to have you on the channel. I know that the viewers really want to know how it feels to have a son who's just so much more accomplished than you, such a sharp technician, so much better of an investor than you ever could be. But we'll save that for the end. We're going to dig into some other questions first and foremost. But no,
I thought this was an interview, not a boxing match.
We got to throw a little fun in there for the folks. Let's just kick it off. I'd love to ask you. You talk a lot about review, and specifically in Tensile Trading, thinking about stage 10, which is all about going back and reviewing everything. You talk a lot about review and going back through your trading journal, all that kind of stuff, really digging into process and going back through what you've done to evaluate yourself. So, I'm curious to ask, at the end of a year, I mean, obviously a crazy year like we've had here today, or just any standard year, what are you doing to look back, to evaluate your performance, both professionally and personally? I mean, you've kind of got those wrapped into one, being an individual investor, but talk to us about kind of your year-end review process that you typically go through and how that's been sort of playing out this year.
Well, I'll focus first on the professional part, and a part of it, this migration to the home office. A big part of that has been going back to what many investors don't want to hear is something that my focus has been on asset protection as opposed to so much on asset growth as it's been for the last 30 years. So I think it's important to understand that. The other thing is for me to look back or talk about looking back, you should understand how I look forward. And this is the paradigm that I've been teaching for 20 years at Bellevue College. I've been using this myself. The thing to notice here is that buying is stage 7. And a lot of people have trouble understanding that oh my God, there's all this foundation building that has to go on. So just an acknowledgement, I guess, this year that I'm ratcheting back my growth objectives. And for those of you that read my Trader's Journal blog, I'm really big on sell disciplines and
Sure.
and asset protection.
Yeah.
And I focused, I think, much more on that this year. So, and I know many of your listeners are, they're novices or newbies, and those guys are tend to swing for the fences, tend to be much bolder, if you will, than I am, and I'm really growth is still my objective, but this is the roadmap that I follow. And a big part of this, as I say, is, I'll talk about it a little more, keeping a personal trading journal is something that I've done for 30 years, and it's a really powerful tool. And at this time of year, when you're sort of doing the revisiting, retuning, refining, that's a big part of what I do. So that sort of professionally speaking. And then on the, this is a shameful plug for our book. And then on a personal note, this is what I dig into every year at this time of year. I call it my sort of seasonal round trip. Over the years, and certainly this year, I have, and I would recommend for those of you that haven't talked to your estate planning attorney, and not to get political here, but I think that with the new government we have in DC, you're going to see some changes. You need to have a chat with your estate planning attorney just to get some recommendations there. But this is my world, and this world is both personal and professional. And these are the things that I go and review every year. So I would encourage you to do the same sorts of things. It's a very introspective time of year. I sort of enjoy it, but I do things like review the, I'm having an accountant change because of a retirement. I did a few years ago have my estate planning attorney retire, and the new one is fabulous. And just I'm upgrading my computer. I always adjust my written investment plans.
Yeah.
I've talked about my dedicated trading space changing.
Right.
So
Right.
that's sort of on the personal level.
Well, I got to say, I've always loved this concept of the business of investing. And it doesn't mean that, you actually are a business, but it means that you're treating yourself like a business, right? You've said that for years. I've heard you say that
Absolutely.
for a long time. Yeah. And
Even
so
if
to
you're a
see
hobbyist.
this laid out, I mean, you're going through more than just, investing routines and trade executions and things like that. It's interesting to see things up here, like software and accounting and bookkeeping, computer hardware, all the sort of the hard pieces of what it means to be an investor too. So you're really digging through more than just, looking at individual trades and how you did. You're looking at everything sort of as a whole, right?
Well, I do. My trading journal has, and I'll talk about that maybe a little bit later, but
Sure.
I'm very specific. The first question you asked is sort of the view from 30,000 feet.
Yeah.
And so we can get into more of the specifics, but
Yeah. Well, no, I mean, I think this graphic captures a lot. I mean, when you're thinking about how you're looking back at the sort of year end, you're looking at so much more than just simple sort of performance numbers, which is really good to see. I do want to dig into, though, what sort of my next question is, how do you evaluate your performance overall, and specifically this year, how would you evaluate your performance overall? And maybe, bring in the Trader's Journal. That's a concept that you did touch on. Maybe this is a good opportunity to talk about how that sort of factors into your evaluation of yourself and your performance each year. And specifically, if you can touch on, how you would evaluate your performance this year in 2020, obviously quite an interesting one. What would you say there?
Well, first of all, before I get into my performance, again, I think it's important to understand that I'm a stock trader. I trade ETFs, and I also use a heavy user of no-load mutual funds.
Okay.
My portfolio is divided up into 20 different asset classes, and I follow this approach called best of the breed. If you happen to read the May 31st, 2019, I wrote a blog, Traders Journal blog, describing the best of the breed. But basically, it comes down to, for example, I'll use biotech. Biotech is one of my asset classes, and it's an ETF. I use it, and I have a comparison that I can compare the best other ETFs out there, such as BBH or IBB. And then a whole series of mutual funds I've compared it to, like FBIOX, which is a Fidelity. And I've ascertained that XBI is the best representation for that. That's sort of the best of breed. And, you don't have to be a rocket scientist this year to know that XBI is outperformed the market, VTI, which is sort of the circuit I use, by a factor of 2, and some other even higher than that. So my benchmark always with my performance, unlike a lot of people, is not SPY, but VTI, which is the Vanguard total.
Interesting.
So having said that, my portfolio is divided up. 80% of it is in what I would say is more core. Core being ETFs like XBI, SMH, JKH, and IWF. Those are core positions that are represented by the best of the breed ETFs.
And maybe if you go back to that first graphic, you had some core versus explore stuff up there, right? If we go back, I think maybe it was one more to your first slide. There we go. Yeah. So there you go. You've got your core and your protection and your explore and your growth. So you're saying you have that core 80% that fits into that step 2, asset protection?
I feel as though if you own IWF, for example, I'm still growth oriented, but it's an index fund. It has low fees. Take a look at the history. It's been, it gives me the growth I'm looking for without the crazy sort of volatile risk of some of the sorts of things that other young guys trade. So,
sure.
Yeah, but and then certainly my mutual funds, I don't abandon those. I have, like, the T. Rowe Price Global Tech Fund has outperformed the market by a factor of 2, and the symbol on that's PRGTX. There's also a Guinness Global Fund that's IWIRX that's outperformed. I'm well diversified, and I think it's a pretty good, safe sort of approach for where I am with my risk tolerance. So now my stocks.
You're digging into, if I can pause there for a second, you're digging into each of those asset classes, like you're saying, those 20 buckets, and basically saying, is an ETF better for this asset class, this group, or is a mutual fund able to generate enough outperformance that it's actually sort of worth it to go with a mutual fund in that case? And then, are you going back at the end of the year and reevaluating each of those buckets, or how frequently are you going through and trying to evaluate ETFs versus mutual funds for both of those buckets?
The best of the breed is a quarterly thing that I do. And it really does irk me that we have certain evangelists out there that say, oh, just buy ETFs, or, oh, no, just buy, no-load mutual funds, or just buy indexes. And of the 20 asset classes, I've written blogs about this before in the Traders Journal that show that in half the asset classes, the ETFs, like I just mentioned, XBI, for example.
Sure.
That is the best of the breed. That's the representation I want for biotech. There are other asset classes that are, for example, one of my core positions is Matthews Asia Pacific, which is MAPIX. It's a Asian no-load mutual fund. The positions are dividend yielding Asian companies. it's outperformed VTI by a factor of 2, and it's no load. And I can't find a better ETF that beats it.
Yeah.
So of those 20 classes, it's not exclusively, don't tie yourself to just ETFs or just mutual funds or just
Sure.
stocks.
You're finding kind of a hybrid between those and then looking at each different group, different asset class, or each of those 20 buckets, like you're saying, as its own thing. That's interesting.
And I have my 10, I have 10 stock positions that I keep. Some of them, like Amazon and Microsoft and Visa, no, those guys I've had for 10 years.
Sure.
Newer positions like Qualcomm or Avalara, which I can talk about later, those also, they're outperforming the market. So I feel as though I have a very safe portfolio and one that is actually indeed outperforming the market. So yes, there's some risk, and certainly we've all seen the volatility this year.
And if you
let me squeeze in a little caveat
Sure.
is be careful if you're looking at some of the funds that I mentioned and even ETFs. This is the time of year when they do distributions, and don't think ETFs don't do distributions. Please, and StockCharts has a way to look when historically they've done dividends and distributions.
The dividends indicator. Yeah, that's a great feature.
Yeah, it's a great indicator. Don't go buying an ETF or mutual fund 2 days before a distribution, or you're going to get some percentage of your money back in 2 days, and you're going to be taxed on it. Yeah. So now, having said that, I'm very upfront about the fact that I don't do any leveraged ETFs. I don't do any inverse ETFs. And for those of you that believe Vanguard is a good organization, Vanguard actually, their brokerage has banned, say that again, banned leveraged and inverse ETFs. So that gives you a sense of how I feel.
Yeah. Interesting. Okay, so when we're thinking about evaluating your performance kind of at the end of the year, you're going back through, if you click back again, I love that first graphic that you had with the asset protection. Yeah. So you're sort of going back through your core, doing a review of each bucket and evaluating how your positions are doing, ETFs and mutual funds, comparing, where you kind of should be. And then you're also looking at this smaller explore bucket. Is that where you're slotting in things like Qualcomm and Avalara, as you mentioned, or did those sort of fit in the growth explore portion of the picture here?
No. As I said, I'm roughly about 80-20, with 20% being the explore. But I would like to bring up a quote that I'm sure many of you have heard before. Jesse Livermore, who, for those of you who don't know who he is, buy his book, read his book. I think I've read it now 6 times. He has a famous quote.
Reminiscences of Stock Operator. Yeah.
I'll talk more about books you need to read here at the end of the talk. But he said, it was never my thinking that made the big money for me. It was always the sitting. And I have to confess, I've been sitting on Amazon, Microsoft, Visa, and MasterCard for over 10 years. Well, I've made 10 to 20 times my money in 10 years.
Yeah.
Am I a genius? I'm really good at sitting through that. Now, I also have a methodology that I trust.
Right.
I don't panic. I stick to the program, and I've had 30 years of doing this. So, it's not crazy. But having said that, for example, let's talk about Avalara. Avalara is something that is my explore portion of my portfolio. It's a relatively new company. It went public in 2018, and it happened that I had just received a Washington State documentation that said, you have to, if you sell anything in the different jurisdictions, you have to pay the appropriate sales tax. In Washington State, where I live, there are 50 different tax jurisdictions. And I know this is a problem for StockCharts.com because wherever the audience lives, and when they subscribe to StockCharts, they have to pay sales tax. Well,
Yeah.
Avalara has figured out how to collect sales tax. And you'll know a few years ago, they, we all started to pay sales tax on internet purchases.
Right.
So
benefiting.
they take care of that. They also happen to be 2 blocks from my office in Pioneer Square. So I went to their office. I sat in the lobby. I ended up talking about 50% of the people were accountants, 50% were IT people. And I started following it. Well, as I said, it went public, and I started picking up shares in May of 2019 when it, those handcuffs that
Sure. After the
after an
IPO.
IPO.
Yeah.
And it's been a pyramiding into it over time.
Yeah.
It's risky. Is it volatile? Absolutely. But it's not 90% of my portfolio. It's only a small percentage. So that's an example.
And that's where I've always seen the technicals really come in for you is more in that explore portion of the portfolio. I mean, so much of the core that I see you working on is a lot more about kind of historical performance and fees and kind of optimizations there and diversification and things like that. But then, you really bring in the technicals and the charting approach more in things like Avalara. I mean, you've been showing me charts of Avalara for quite a while now, and it's been just a rocket ship. I mean, it's been a beautiful outperformer, great relative strength, and just a beautiful chart, great trend, all that. I think that's kind of a good segue into one of the questions that I wanted to ask was, where do you feel that you've really got it done as an investor, as a trader, as a strategist this year? I mean, what have been some of your other best calls, best trades? What led you to make those? I mean, we're talking about Avalara. You've also mentioned Qualcomm, but it seems like that's one sort of big win for you this year has been Avalara. What else stands out to you as areas where you really feel like you've got it done this year?
I know most of your listeners aren't going to want to hear this, but it's not in the stock picks in my sort of tentative review. It's in my asset allocation picks.
Interesting.
And this year, I'll talk about one disappointment that I've had, but
sure.
I spend a lot of time doing asset allocation kinds of focus. And this year, I won't tell you how much we have in XBI, and biotech has done phenomenally well.
Yeah.
I'm a big believer in tech, and tech again has outperformed the market.
Yeah.
And so those big bets that I've made, for example, telecom. Yes, I own Qualcomm, but I also own a T. Rowe Price has a telecom fund, a no-load fund that has doubled the market. Well, we all know what's happening with 5G.
Sure.
And so those are big bets or big calls at a cocktail party. That's not what people want to hear. They want to hear about buying the individual, the Qualcomms and the Avalaras. That's sexy.
Yeah.
But the big money is making those asset allocation calls. And I would shamelessly like to point out we have a disc on asset allocation.
There you go.
It's really the first step. What you see here on the graphic, money management, it is worthy of your time and attention, and you get a lot of bang for your buck.
Yeah. So the time that you've spent focusing on your asset allocation decisions and your exposure across different groups, that's where you feel like you've really got the most value, and that's where you've really kind of executed this year, has been in those asset allocation moments.
Yes, I feel like I did a great job. Now, I'm happy to talk about an area that I miscalled.
Well, that's a great segue. I mean, let's talk about what you need to improve. What didn't work this year? What were sort of your big lessons learned? What were the pain points in 2020 that you want to remedy going into 2021?
Well, I'm in the process of remedying now. I guess the caveat, you always hear this the past does not guarantee the future, the results, the disclaimer.
Past performance, not
Um,
indicative.
and I bought into a fund back in 2018. It was a Vanguard global low volatility fund.
Okay.
And the history was fabulous. It actually seemed like one of these where the rewards were far higher than the risks. The ratio was very good up until that point. And so I had bulked up in that low volatility, and I know there are a lot of ETFs out there that are low volatility ETFs, but I bulked up into this. I drank the Kool-Aid for the low volatility Kool-Aid, and I haven't lost money, but it was disappointing as heck. Here I'm looking past the COVID, epidemic, looking forward, but looking at how that global low volatility fund performed, it didn't perform this year like it was supposed to, like I had hypothesized it was supposed to.
Well, and especially because I remember you mentioning this to me, especially in the drawdown that we saw sort of February and March, right? That's when it really caught you by surprise. You were surprised by the drawdown in that fund.
Yeah, I mean, its biggest positions were things like Alibaba and Amazon, Amgen, Taiwan Semiconductor, Walmart. I mean, they're blue chips. The blues are the blue chips. It has a nice yield as well. It's global. It's run by Vanguard. It's low fees. That was a big disappointment.
So, I mean, what's the lesson learned there? Is the lesson learned that you can't just sort of set it and forget it? You have to continue to watch things, monitor your asset allocations and continue to watch the charts and the relative strength and all that?
Yeah, it gets back to technical analysis is the only way that you should focus on module 9, which is selling.
Sure.
And I know enough fundamental, billion-dollar managers that don't want to really disclose that they use technical analysis on the sell side.
Yeah.
There's no way to. If you wait for the fundamentals to turn before you sell, you're going to be last off the sinking ship.
Yeah.
So I'm a big believer in stage 9 selling is all about technical analysis. Get out. You make money in the markets by not necessarily knowing why, it's knowing what.
Yeah.
What's happening? What's the market doing? That's how you make money, not knowing why from sort of an intellectual academic standpoint.
Yeah. Gatis, I'm interested to ask, do you feel like there are areas where you struggled this year? Do you feel like there are things that you've really taken away from any of those experiences if you do have, pain points that you've struggled with? Or have you felt pretty comfortable this year? How have you felt kind of throughout the year? What do you think?
Comfortable is not the right word, and maybe struggle's not the right word.
Somewhere
really
in the middle.
Either. I've really focused on. I've had 30 years of doing routines and having seen all different kinds of markets, so I have a methodology that's been very consistent and sort of printing me money, printing me an income for a long time. And the bottom line is, I mean, I love the markets. I love investing and trading.
Mm-hmm.
I sincerely like the people that I meet that do investing. And so I really haven't struggled so much other than the acknowledgement that I'm now moving my office and that I'm really moving my my risk tolerance down a notch.
Sure.
As you get older, you do want to. I think that's been the biggest thing I've struggled with. How far should I ratchet back the sort of growth trading aspect and settle into a more comfortable investing kind
Sure.
of mode.
No, I mean, I love the conversations that you and I have about that because we're on sort of different ends of the spectrum. I mean, both of us so active in the markets, but you think about where I am, kind of approaching my 30s, where my risk tolerance is, that kind of thing, and then in your mid 60s, where your risk tolerance is, and we both have this incredibly active approach to the market that's kind of built on the same discipline, the same methodology, but we have very different sort of executions of that because our risk tolerance is in different places, which is always fun to talk to you about. I think it's healthy for both of us to see those different perspectives. So yeah, I love that you're talking about that. And that's
This is how I perceive you, young millennial
okay.
with, loves all the choices and loves all, and I'm a much smaller Swiss Army knife.
Sure.
I know what my choices are and where I'm looking, and
Yeah.
I'm always amazed at the stuff you look at, the
Yeah.
breadth of stuff you look at.
Yeah.
And I'm, a big part of me is it ain't broke. I'm not trying to fix it. So, when you tinker
Yeah.
too much, you get in trouble. But
Yeah. Well, and
um,
I think a part of it for me, versus for you is sort of, how close are you to needing this money, maybe is kind of the question that you need to ask yourself. And so, for you got to think more about kind of income management and things like that. I mean, I've got a long runway in front of me. So I think when you're earlier in your investing career, you can sort of experiment more, go out more. And, I've seen that change in you. It's been interesting to watch that change in you over the last 20 years. Um,
let's not get too disclosure personal.
well, no, but no, I think you have shifted quite a bit. When I was growing up, you were much more into stock picking, and the growth part of your portfolio was really, what got you going and where you spent a lot of your effort and energy. It
That's
seems like,
true.
especially now from our conversation today, it's clear that you're focusing more on sort of shrinking that down, paring that down a little bit more, focusing on the asset allocation and the protection, which is interesting. And I think that's healthy, and it's wise. So
Well, I think my focus is, I realize it has to be more on, um, you young guys will sort of chuckle and go, "Oh, I don't need that," but it's staying fit, staying engaged, being thankful. Um,
yeah.
there was a recent TED talk that I heard through the Stanford channel, and it pointed to research that says people that are that happiness is tied to gratitude.
Yeah.
And I really do try. I mean, the market generally makes me happy. I just enjoy being engaged.
Yeah.
I enjoy, one of the things that I do at this time of year is I really dig into, for example, expenses.
Okay.
Um, which funds, for example, I think with the S&P 500, you have alternatives that invest in the S&P 500 that the expenses can be like 5 times higher than SPY.
Yeah.
Biotech as well. There are, I mentioned XBI, which is 35 basis points. BBC, which is another alternative, it's 79 basis points. So
Hmm.
I love being a detective.
Yeah.
I love looking at that, and I
Yeah.
will. Not that I have any tie-ins with Morningstar, but for those of you that haven't used the Morningstar X-ray function,
Hmm.
um, that appeals to my
It's a great tool.
detective side. Load your portfolio into Morningstar, and then use the X-ray function, and it'll give you sort of overall details, stock intersections, and again, it gets back to what I said earlier. It'll really help you with your asset allocation.
Yeah.
It's a really powerful tool
That's the
for,
one that kind of unpacks all of your ETFs and your mutual funds, right? It sort of pulls them apart to show you what you actually own, what the underlying stocks are.
yeah, I'm always shocked when I do a full X-ray. I've said this years and years ago. I did the first time I used X-ray. My biggest position was Berkshire Hathaway, and because it was owned by so many different funds and ETFs, and I never owned it individually. So the other thing that you'll be surprised at occasionally is how much cash you have, because some of these mutual funds can hold a lot of cash, and is that really what you want? You're not paying them to hold cash.
Right.
But the other thing that you really need to focus on, which frankly, Morningstar used to be better at this. Now they don't disclose it as easily. But, there are funds like the American funds, Growth Fund of America, the symbol's AGTHX. It has 17 flavors of the same fund. All 17 of them have different front-end loads, deferred loads, expense ratios, 12B1 fees.
Yeah.
That's free money, guys, sitting on the table. All you have to do is pick the right, get the damn right ticker symbol.
Right.
And you'll put money in your pocket. It's the same fund. It's just,
Yeah. Well, so Gatis, we're getting a little bit low on time. One of the last questions that I wanted to ask you was, as we're going into the new year, we're going into 2021, where do you think you have opportunities to improve? What are you thinking about doing better in the new year? What do you want to sort of, move yourself forward? How are you going to move the needle and push yourself forward in the new year in 2021?
Well, one thing I would suggest, I think there's some fabulous books out there that we've mentioned, the Jesse Livermore book. If for those of you that could refer to a blog that I wrote October 25, 2013, and it's called Pivotal Books in a 25-year Trading Life. And what it does is it recommends the heavy hitter books under all 10 of the Tensile Trading stages. So I would really encourage you to do that. I do it myself, and it's embarrassing, but I just reread this. And it was, one, it was fun, but two, it was like, oh, geez, I need to walk the talk again. Yeah. Especially in chapter 3 where we talked about the investor self. Yeah. That's the hardest. I got the mechanics down. I've got the technicals down, and it's the investor self that I need to be better at.
Yeah. I should give our book a good read again too. I think I might need to curl up here with a cup of coffee and give it another read.
It's amazing when you've written the book, how quickly you can go through it and how quickly you pick up. Because I've read reminiscences now so many times, I can go through it, but I still, it just amazes me how that book, I still pick up stuff. I've read it 6 times. How could I miss this point? Yeah.
So when you're thinking about improving going into 2021, it's not about monumental changes or big, structural shifts or anything like that. You're thinking about optimizing and improving and really executing. You're thinking about going back through your process, reviewing everything and trying to execute, more flawlessly. That's kind of what I'm hearing from you.
Okay. I'm going to give you a 1-minute summary of each one's like a second. These are the 16 essentials I sort of put together. 1, the miracle of compounding. It's an amazing thing. Investing is a business. Think of it as a business. Okay. You got to have a system. Write it down. You've got to have a personalized approach. Your approach is different than my approach, and Bobby's approach will be different. Discipline, discipline, discipline. Next one is routines, routines, routines. I just mentioned the investor self. Don't be scared to read books like Trading in the Zone. It's all about the investor self. You've talked a lot about choice overload. Yeah. You can't have a universe. Anyway, you've got to
slim down that Swiss Army knife. That's what you're saying?
Yeah, I think so. Keep a trading journal. I think that's a big, that's been a real tool, fabulous tool for me. Yeah. Rational analysis, I've talked about this, blending technicals with fundamentals. Yeah. Be an optimist. I've made a lot of more money than a couple of my friends that tend to be sort of niggling nabobs of negativism. You're going to make money by knowing what's happening in the market, not why. The intellectual part of you will go, oh yeah, I want to know why. Well, the what is how you're going to make money. What's the damn chart telling you? Take action. Don't be, if you can't pull the trigger. And then the last one, which I haven't really talked about, is the sister strategy that we talk about in the book. You know, the stock market works by the law of groupings. So you got to be in the right sector. I've talked about, you got to be in the right asset allocation, apportionment, you know, those. So that's a quick sort of summary as to, you know, moving forward. I'm not sure what I had. So
Revisiting.
Here's the last slide, which is an inverse of what you saw before. Stage 10 is going back backwards.
No, so you know, I should mention, I don't know if this was clear from earlier, but all of these graphics are actually from that book, from Tensile Trading, the 10 Essential Stages of Stock Market Mastery. You know, if you are interested, any of our viewers here, if you are interested, definitely go check that out. It's on Amazon. It's easy to get on Amazon, but we also have signed copies in the StockCharts store. So if you go to store.stockcharts.com, that's a great place to pick up a copy and support StockCharts, which is always fun. But you know, it is a great book. I mean, it's great to revisit some of these graphics and these concepts with you. You know, it's powerful to think about this. And I love what you're talking about with the structure, you know, going back and thinking more about executing your system. You know, that's really, you know, the most important sort of reevaluation routine that you need to take at the end of every year is thinking about how have I actually executed my plan, my system.
It's your system. It's your plan. It's different than mine or yours. It's very personalized.
No, I love hearing you talk about that. That makes a lot of sense. So, you know, we're getting low on time here. Gatis, I do just want to genuinely thank you so much for coming on, for sharing a bunch of time with us today. I mean, it was really fun, like I said, to dig into these concepts, talk about these themes with you, and talk about how you're reevaluating your approach to 2020, to trading and investing in 2020, and then how you're, you know, adjusting for 2021, what you're thinking about doing better, improving, all of that. If folks want to get in touch with you, what's the best way? You know, you've got obviously the website. We have the website down there at the bottom, stockmarketmastery.com. What else would you sort of guide people to? The blog?
I'm not going to encourage people to contact me, but if they're really desperate, stockmarketmastery.com is our little website where there is a link, an email link, which if your question is short, but you know, it's more of a philanthropic kind of gig. Anyway.
Well, I would encourage everyone to go visit Stock Market Mastery. I mean, if you're interested in sort of following Gatis, keeping in touch a little bit, that's a great way to do it. There's a free email subscribe link there. But, you know, I also should mention the Traders Journal blog on StockCharts. It's a free blog. Gatis writes quite a lot of content there, and there's a lot of history to it as well. I throw articles in there as well from time to time. But go look for that too. If you go to stockcharts.com/articles, you can select the Traders Journal blog from the little menu up in the top right corner. It's a great way to find.
I think it's been archived. It has. StockCharts has archived it since 2012.
All the articles.
And it's all this roadmap. The roadmap is the blogs are organized under these 10 stages, so it'll make sense to you.
Coming up on 9 years of content going in that blog. That's amazing.
I started it when I was 35.
It's a great compliment to the book too. So I mean, if you go pick up a copy of Tensile Trading and then pair that with the blog, I think that'll be great. Gatis, I just want to thank you so much for coming on today. Viewers, I want to thank you for joining us here for Reflections 2020, our year in review special.
Hey, Grayson Roze here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.